Hey traders, Raghee here. Welcome to our top tier outlook. I couldn't grab the right screen, and then I remembered I actually reset up my rig here at the home office, and I had to capture a completely different screen. So Hugh here has not done their pre-fall, or I should say pre-Q4 computer cleaning. I cracked open the Falcon that I have here that's been running my trading life for, oh gosh, 3 years now. Doing a great job, very stable. Got another one I'm setting up for the office. This one's going to be from the good folks over at, oh gosh, Bob, what's the name of the place that I'm getting the new PC from? Digital Storm? Something like that. So looking forward to that one. But I'll tell you what, the fans on the Falcon are unbelievable. There was just a carpet of dust inside it, if for no other reason, because this machine has been keeping itself unbelievably cool. So I don't know how many of you have gone in to kind of knock the dust out of your PCs, but I did that over the weekend among some other house cleaning as we get to what could be the most exciting part of our trading year, which is that Q3 to Q4 roll. Hey, by the way, I know I'm in all sorts of housekeeping stuff today, and I'm mentioning this mainly because these are things that I'm finding are really have been really helpful. So yeah, clean your computer. But the other thing is, I don't know how many of you actually think about the height of your desk. And yeah, Bot saying it's Digital Storm. Yeah, I'm getting a computer from the folks over at Digital Storm for the other office. And a lot of you might have seen the desk tour that I did a few years back with the new computer and my layout here. And you can catch that over at my YouTube channel if you've never been over there before. I've got some cool stuff over there, and one of them is the computer. There it is, trading desk setup, functional, not fancy. And my thought was, hey, can I set up a rig on a budget? And so this is actually the same rig I'm on right now, although the mic is in a far better place, and I do have a wired mouse and wired keyboard, but this is pretty much a desk. That's an IKEA dining room table that sat at about nearly 30 inches. And I didn't realize what havoc it was wreaking on my elbows and my shoulders. So if you're a trader out there who's been suffering with that kind of pain, think about lowering your desk. My husband came in, dismantled this thing, and chopped nearly 3 inches off it. So it looks unusually low at first, but what a difference it's made. So anyway, I'll be doing an updated tour at the new office, which is 2 doors down. So I'll be doing a new tour, same desk, but completely different setup of the monitor. So I cannot wait to share that with you all. All right, so that's just a little bit of housekeeping as we kick off Top Tier Outlook. And let's go ahead and jump into the charts, because you know what? That's why you're here, right? So the first thing we want to remember as we take a look at, what happened last week, why is the market in such a bad mood? And ultimately it's because not that we're going to get another quarter point hike from the Federal Reserve. That's not really even the high probability scenario here. The high probability scenario is that we're not going to see a cut, which is mind-boggling, because it used to be a March 2-4 to May 1 window for the quarter point cut. By the way, see, I do drink water and not just coffee, although I won't lie, I still have the double shot that I made a couple hours ago. So the bigger shock, the thing that the market, right? And by the way, gang, there's no such thing as the market, right? Even though we all like to say that, I say that, I've been trying my hardest to stop saying things like the market. Currencies, treasuries, indices, energies, metals, each quote unquote market has a grouping. And the more we can be specific to the grouping, the better. The indices, right? Which normally when we talk about the market, we're talking about stock indices, right? So the stock indices are in a bad mood for 2 reasons. I'll show you here in a moment. No, this is not circling the drain before the end of the world, which, by the way, has been promised to us by various analysts all year. I wonder how that's been working out. I don't say follow and buy the dips and look for uptrends and get long to be a Pollyanna or just to be a hapless, hopeless optimist. There is a general tendency to keep moving higher when we're above certain key levels. I'll show you them here in this update. And I've dove into a lot of detail on three main topics. This is a very how-to issue of Top Tier Outlook coming out tomorrow. Why day trading continues to offer the best edge going into end of quarter, which is this Friday, the 29th. Which sectors are the strongest of the, really what we want to consider the five main sectors: XLK, C, Y, F, and V. So which are the three strongest and where does that map to in terms of the index that I want to focus on? What's the seasonal rhythm? We'll get to that today. The other big topic is the art of base hits and finding certainty in chop. And ultimately, we shorten the time frame. If I'm uncertain, if I can't see that far out into the darkness because my flashlight's only so strong, what am I going to do? I'm going to take shorter steps. I'm going to take my time. I'm not going to think what's a quarter mile down the road or even 100 yards. I'm going to look at smaller chunks. That's day trading. That's short-term swing trading. And the last bit is pre-market prep. There's a number of things that I love to do before the market. And these are things that we do in Charts and Coffee to a certain degree. And in this week's Top Tier Outlook, which my Sector Secrets Mastery folks get as part of their Mastery subscription, as well as those of you that are subscribed separately to Top Tier Outlook, what are the pre-market levels that I wait for clarity on for high probability setups? How high probability? Gang, we've been trading now through August, which you all know, total Dramamine type Cs. First 2 weeks of September looks a lot like August, and now we're just getting this meltdown. We're still operating at nearly a 70% win rate. Why? Not because we've got a super secret squiggle, not because we're doing some super secret ninja move, but because we're looking at high probability setups, keeping our time frame and time horizon short, and just taking what the market gives us. Base hits. It's boring. It's not sexy. Everyone loves home runs, and that's fine for most folks, right? But what we want to remember is that if we're looking for base hits, if we're looking for getting in and getting out, one of the best ways to do it is keep it really short term. And that means day trading. This doesn't mean all sorts of active, super active levels. It just means waiting until you have an edge. Sometimes that edge is going to be a scalp. And by the way, we have from the class that I just did, and by the way, thank you so much for all the feedback we've gotten on the class. A lot of folks look, my members are telling me, hey, we're turning the corner. This is the first profitable month. Can you imagine as a trader, and August is your first profitable month? Imagine what happens if we get to action like July again. We'll get to that. So what we have right here is a lot of a tantrum being thrown for two reasons. One, the Federal Reserve doesn't seem to want to cut until into July 31, which is pretty late summer. All right, the other thing is, gang, this is the way markets behave in September. There's nothing really unusual about market behavior here. If you take a look at what's happening with the S&P, in fact, don't look right now for September. Did July go straight up like this? Yep. Did August chop around like this? It sure did. Did September chop around much like August and then start to sell off around midway through the month? It sure did. The value of a seasonal is not that it exists. The value of a seasonal is that the day that we start looking at it, was it working for the past few months before we started looking at those seasonal tendencies, at these seasonal cycles, at these rhythms, as I like to call it. So the question really is, how much longer could we see this move to the downside? Not much longer. If this is still seasonally sound, right about the time that everyone's going to be ringing the death knell for the equity markets. And by the way, isn't it funny how everyone's so bearish after sell-offs and everyone's so bullish after rallies? Gee whiz. Gosh, everyone can see a green light and a red light. The trick is, how do I manage risk? How do I see these moves? Right now, I'm going to look at this as still a lot of chop, because the funny thing is that's still what's dominating most of what we're seeing. Chop from the end of July to the middle of September. We get maybe a week to 10 days of downtrend. And then again, we go right into a chop. So this is a very small window of a downtrend before we start chopping again throughout late September, October, and into, I would say, middle of October. We could double bottom according to the seasonal. I'm not trying to look into the future. I'm not gazing into the crystal ball. It's a seasonal tendency, which, by the way, has been pretty much knocking it out of the park. It's not that way all the time. So we're gonna double bottom around mid-October, and then we could see a difficult start, but overall movement higher into middle to early November. All right, so that gives me at least some timing and understanding of the weakness. This is not weakness that comes out of nowhere. This is the way September has behaved from September 2018 to September, where we are right now. It's a 5-year look back, right? And by the way, you might say, Rog, 5 years, but I mean, what about the last 10 years? Looks the same, doesn't it? So this is very much what we see. Strong July, choppy August, chop into September, whoosh into the latter part of Q3, a little bit of back and forth the first week or two of October, and straight up. Why the movement higher in October? I have a theory. You watch something for 30 some odd years and you start to see patterns. I'm sure a lot of you have seen these patterns too. The pattern is the last part of the year tends to be what? If you're managing money and you've got to show your clients, hey, I've given you a great return. Recency bias is a thing. No one remembers what you did in Q1, Q2, Q3. Hey, how are we doing now? Right? Recency bias. So if I am a money manager, let's go to the charts here. And if you have any questions, feel free to type them in. So if I'm a money manager and I'm looking right now at where it's ripe for opportunity, I don't want to, as they say, catch a falling knife. That's just buying something because it's cheap. That's just buying something because it's just, nosediving, right? That's not what we want to do. And that's not what they'll do either, right? So if I'm looking at the S&P, there's a few key things that I want to know. Number one, this is so easy. I was on Benzinga last week and I said, look, so much of my portfolio and so much of my career is built on really elegantly silly, simple things. A set of key moving averages that color code the bottom two rows of my chart, those two colors that are traveling from left to right, those are 4 exponential moving averages. Nothing magical, just really consistent. Boring, right? And a 200 exponential. Now, if you would have talked to me 15 or 20 years ago, that would have been a 200 simple moving average. Why the exponential? Let's go back to recency bias. The exponential weights the more recent closes heavier than the older closes within the 200 periods. So I like an exponential. I think it works really good, but a 200 simple is just fine. Which sectors are above, which indices are above the 200? If you haven't looked to see which stocks you're interested in, which sectors you're interested in, look at price action in relation to the 200, okay? I want to give you all some really actionable things. And by the way, if you like this kind of stuff, yeah, Rog, I want some simple, really clear to define levels that I can make decisions from. Come check out what we're doing in the Sector Secrets Mastery. This is a staple of what we do. Look at Apple. If you're an asset manager thinking, how do I buy something kind of cheap that my client probably wants, it has a really good chance of moving higher. Golly, Apple's pre-sales for the iPhone 15 are looking pretty stellar. It's sitting right around the 200. When's the last time this thing even broke the 200? And when's the last time Apple had one of those? I mean, for a very brief period of time, early this year. And then look what it's done since. And every time we get close to it, it's almost like repellent. Whoosh, just moves right back up and away. I wouldn't mind trying to take advantage of something like that over the course of the next 90 days. These are the kinds of things that we'll continue to look at. I'm looking at Amazon, for example. Let's do the same thing here. A little bit of time earlier this year, chopping around the 200, but for the most part, it's clearly above. It's been in an uptrend for most of the year, right? Which is to say, if it wasn't moving sideways, which is that yellow lower row of the 2 rows at the bottom of my screen here, if it wasn't moving sideways, it was green and up. I wouldn't mind looking at something. It's been doing that all year and is still above the 200. The end of the year is not when weakness is necessarily opportunistically bought. There are things that are down in the basement that will be very tempting in Q1. What we're going to look at here. Again, these are just 30 years of watching behavior from Q3 to Q4. What is on sale, but not super, super bargain basement pricing, right? In other words, what has a chance of continuing that's just on sale right now? Because I only have 90 days to showcase some decent returns, as opposed to the first of the year where I've got pretty much the next 12 months to do some razzle dazzle, right? So keep that in mind when you think about behavior, about how money's going to move in and out of the market. Strength will get stronger for the most part, into the end of the year, and weakness will get weaker. And by the way, a lot of you already know this weakness will get weaker phenomena, because that's a lot of the fuel of tax loss harvesting, right? Strength gets stronger, weakness gets weaker. And that was really very much one of the characteristics of Q4. So use some of these very human nature derived patterns to your favor. And if you're thinking, Rog, my time horizon is not that long, no problem. Day trade, as we've been doing. We've been day trading in the mastery every single morning. We do indices, futures or the ETF options, ETFs, and stocks. We look for 4 to 6 setups every morning. By 10:35, we get about 2 to 4 of them. So the whole point is to get the bulk of our setups in within about an hour bell. And then at that point, we can be a little bit more hands-off with the management, because we've taken care of the most important part of trading, which is what am I going to trade and which direction am I going to trade it in? And then putting in stops and risk management. And that's the process that we've been using now for, well, all year, but 2 of the toughest months, August and September, still rolling along really, really well. So I don't say that to make anyone feel bad. I just say that so that if you're saying, no, Rog, that's not how my life is right now. Again, that is what we're doing. So if you want to see what we're doing, come check it out, and I'll walk you through it step by step. All right. So couple things I mentioned I would share with you to kick off your morning for some directional bias as we wrap up the show. Number one, when you kick off your morning, I don't care if it's a stock, a futures contract, an index, a treasuries, do me a favor. Super easy. I've been doing this since I've been day trading, which is at this point, well over 20 some odd years. Where are we in relation to the previous session close? One of the most easy, simple levels you can look at. After that, even what we can do is you look at certain pre-market levels. Are we above or below certain pre-market levels? But the previous session close is going to have such a high probability of generating better follow through than darn near anything else. Now you start to add high-level tools like, hey, what's the current structure of the 5-minute chart? Is it up, down, or sideways? And that's when I can take this overall move in on the daily, which shows whether I'm above or below the previous session close, and then start to add a lot more nuance with a 5-minute chart and what's happening with the 5, whether it's uptrend, downtrend, or neutral. Sunday open, the euro is neutral. Sunday open, the bond market, and it's very early. The bonds are neutral. So these are things we'll keep an eye on. But I'll tell you, gang, between now at 6:20 p.m. Eastern to 2 a.m., 3 a.m., okay, that's the European and UK open, to 4 a.m. Eastern, that's the Asian close, to about 7 a.m., which is, as I like to call it, the first cup of coffee in New York. There's a lot of shifts that are going to occur. So don't think that at 6:20 p.m. on a Sunday evening, we're going to know what's going to be happening at 9:30 a.m. Monday. That's where, look at the previous session close. And there's a lot of other little nuances where if we look at time and ranges based on time of the previous session or even the pre-market, we're going to have a lot more understanding as to whether the market's looking to climb or whether it's looking to fall. And again, if these are interesting to you, check out the current issue of Top Tier Outlook. It'll be out tomorrow morning. Come join us in the Sector Secrets Mastery. And that's what we've got here to kick off our Sunday, gang. So as always, thank you so much for being a part of our simpler audience. Thank you so much for watching this either on my channel on YouTube, Raghee Horner, or the Simpler Trading channel. I'm going to be doing a lot more content on my channel as we go through the remainder of the year. I'm going to really start to address a lot of questions and some more how-to on my channel. So if you haven't checked that out yet, go ahead and subscribe. That way, when I start getting some of that content out to you, like maybe the new desk at the new office. Um, you can check that out. All right, gang, be good to each other. I'll talk with you soon.